Well, we made it 2022, leaving it behind and going into 2023. And what a year it was for investing in 2022. Not a lot of fun at all. We came into the year with an S&P at around 4,800 and left the year with an S&P around 3,800, down about 1,000 points on the market, down into bear market territory, indices falling like they'd never before in since 2008. And here we are, finally made it through. Maybe 2023 can be just a little bit better. So, with 2022 being quite literally the worst year since 2008 for investing, and we all know what happened in 2008, the great financial crisis started around that time. So, that obviously not the greatest year to try and be comparing things to. If you look at the indices here, you can see the Dow Jones actually held up pretty good, only down a little over 8%. The S&P 500 down over 19, and the Nasdaq getting hammered, being down 33%. And a crazy part even about this is that these downward moves and these losses in stocks and in indices in the market, they aren't even as bad as like '08 or the dot-com bubble. So maybe it's an extended period of pain that goes into 2023. Hopefully not. We definitely don't want to see that. But for the recap, we've had everything from COVID problems in China to the invasion of Ukraine. They've all been very serious. But for investors, it is what the Fed is doing, which is still crazy to me that we look at an old guy in a room talking about numbers, and that is the most important person for the entire year of 2022 and still the entire year of 2023. Jerome Powell, is the most important person in finance to determine where markets go. And one person said, I would love to tell you that it's going to be like the Wizard of Oz and everything is going to be in glorious color in a moment or two. I think we may have a bumpy first quarter, and depending on the Fed, it may last a little longer than that, which is great. Just bring the Fed back into it. It's quite literally the only thing that matters in the entire world of finance for whatever reason. I mean, obviously the rate hikes and cuts and people looking for the pivot, those are the reasons, but like just listening to one person is, it's just, come on, there's got to be a better way to do this, right? Even this bumpy first quarter, I mean, maybe right here we can kind of see the flip. We know Q1, Q2, Q3, those were all negative quarters, but Q4 we had a bit of a flip. We had positive in the Dow Jones, positive in the S&P, and I mean still negative in Nasdaq, but only -1. But these other two pretty big moves up in the fourth quarter. So maybe, just maybe, the worst is behind us. Who really knows? Obviously, we could go lower. Nobody knows. But maybe 2022 is as bad as it was going to get, and we bottomed out. And it might not be a V-shaped recovery like what we saw in 2020. Definitely won't be that. But maybe we start ticking up a little bit, trading sideways. At least don't go down, right? And if we want to look at the S&P 500 as like a total amount of companies that are in here, how they all performed, it should come as no surprise that the best performers were the energy and oil sectors with Exxon, Chevron, those type of guys. And even Activision and Walmart hanging up there. Walmart's a little bit surprising that they're still up, basically kind of flat, but up 2%. Activision, obviously, with the Microsoft acquisition, people are kind of gambling and speculating on that. But right here, no real surprises up top. And for total stocks that gained value in 2022 in the S&P 500, it was only 165 of them. And if we change that and look towards the negative, we can see the big losers are things like Tesla, Amazon, PayPal, and Meta, all down 50%, 60% for PayPal and Meta, 60% plus. Amazon only down 45. But I think they are down a little bit more than that. But Amazon is also the first company to lose $1 trillion in value. So, bad records being set all over the place. And for 2022, we've got 338 companies in the S&P 500 losing value. So obviously more losers than people that gained. And honestly, the losers outweighed the gains pretty heavily. You can see we have 122 for this oil company up top here. But Meta at down 64, even Tesla down 54, PayPal down 61. Those are obviously going to heavily outweigh Occidental Petroleum going up 122, especially because I would just assume that these big tech companies are make up a vast more majority in the S&P, have a bigger market cap, and them losing 60%, that hits hard. And this gaining 122% might not even gain as much money as one of those companies lost in value. But talking about 2023, you can see money managers are hopeful about the stock market in 2023, how they plan to invest. So they got a little bit of a thing going on here, trying to say they interviewed some people, some money managers, saying despite this year's market havoc, investors are feeling fairly optimistic going into 2023, according to a new CNBC Delivering Alpha Investor survey. 4 out of 10 predict that the S&P 500 will rise 6 to 10% next year. Nearly 2 in 10 are calling for gains between 11 and 19%. Meanwhile, 6% are calling for stocks to jump by more than 20%, which would wipe out all of this year's losses. So I can't imagine that the recovery is that quick. It has like a 20% year. I mean, maybe you can't rule it out, but I don't know if I would put money on the S&P going up 20% next year. I don't think the conditions are that great for it. But looking at this, so out of 10, there's 4 here, 4, 5, 6, and then maybe, 1 or 2. So there's not too many people out of this 10 that they surveyed that is really bearish. So maybe that's a good sign. Maybe the more majority people who are, money managers are a little bit more optimistic. That might be a good sign. But also, money managers don't really beat the market all too often. So who really knows? As for the biggest concerns that they have in 2023, that's going to be the Fed policy. At the overwhelming majority, a Chinese invasion of Taiwan at 12%, labor and supply line problems at 9%, and resurgence of COVID in China and beyond at 6%. So you can see, like, literally just off this chart and people managing money, the only thing that matters, the biggest thing on everybody's mind is the Fed. Jerome Powell and talking in a Zoom meeting. That's the most important thing to the market in 2023. It was the most important thing in 2022. I don't know when it's not going to be the most important thing, but it's going to be fantastic when it stops being the most important thing. And also talking about kind of like the big tech stocks that have fallen hard, they asked them which former high flyer would you consider buying in 2023? And Amazon and Google are tied at the top, followed by Tesla, and then a little bit of Netflix and no interest in Meta, which is kind of surprising because Meta would be, obviously they're spending tons of money in the metaverse, and I would understand that, staying away from that because I think they are burning lots and lots of money. I don't think it's really worth it with them. But Netflix being a little bit lower makes sense. It's had a big recovery recently. It has fallen hard, but it's recovered pretty hard too recently. And Tesla, even right here, they have it saying on Tesla, 61% participants said they were losing confidence in the stock and the company's CEO, Elon Musk. And that does make sense too, because obviously Tesla was already super overvalued. It was like super priced into growth and the future. That might be slowing down. On top of the Twitter deal with Elon Musk, people aren't too happy that he's using Tesla stock to back it, and that Twitter seems like it is a sinking ship that is going to absolutely sink Tesla, or at least part of Tesla, with it. But we have all made it through one of the worst years in the stock market in recent time, since literally 2008, the last financial crisis. And here we are, 2023. Let's just hope it can just be a little bit better. That shouldn't be a lot to ask for. But that's going to do it for this video. As always, don't forget to smash the like button and subscribe, and I'll see you guys in my next